I guess going on a sort of a different subject, but hotels have once again become very popular over the last few years again as an asset class. There are a number of IPOs taking place with hotel companies. Why is it you think that, I mean, for a while it was, especially during the downturn, very unpopular asset class. Why do you think that it's so popular again and so quickly?
Yeah, a few reasons. The resiliency of the industry, I think, has exceeded the expectations of most, certainly ours and a lot of other investors, that in 2009 and 10, it looked as though maybe hotels were going to become a dinosaur. It was just a tough go, but the bounce back has exceeded expectations, how quick and how strong. Fundamentals are very, very strong, really, the second point. It helps speak to the resiliency, but the fact that demand's at all-time high, continues to grow. Supply growth is fairly tame, if not anemic, in most markets, is a great fact for the forward-looking perspective of performance. That's all appealing. Investors have certainly taken note. And really, we're seeing in a lot of our markets, investments as well, that the group meetings recovery, if you will, has lagged 36 months, the transient side of the business. So really some of the growth, we think, the exciting growth opportunity is there. The broader investment community's caught on, and they're back to valuing a yield premium that hotels historically have provided. Greater volatility, yes. Greater yields, and today that trade-off is one that a lot of the institutional capital is willing to, they're willing to make that bet.
I know that, you said it's exceeded your expectations and a lot of other folks' expectations. Rockbridge seems to be one of the only groups that sort of is not only solely focused on hotels, and there are other groups out there that are solely focused on hotels, but in talking with a number of your colleagues also, and you as well, I hear over and over again that you guys are committed over the long term to hotels, no matter if you're going down or you're going up. Were you investing and or lending in the hotel space even during the downturn?
Yeah, great question. So one of the hardest deals and most rewarding deals that we've been a part of is a ground-up development, Hyatt Place in Pittsburgh, downtown Pittsburgh. We closed on our construction loan in April of 2009. We did think long and hard prior to that closing whether we should be doing that. The headwinds were strong, right? And think back to where you were in 2009. It was not easy to want to take that risk, but we were handsomely rewarded for taking the risk. And so our business is cyclical, though from our experience, some of the best deals we did were 2007, 2008 deals. Investing in all cycles is something we're very proud of. We don't want to be market timers. We don't think that it's prudent to try to allow timing to drive investment decisions. Portfolio management, our approach is if we can get the location and the sponsorship, the product right, with a sustainable capital structure, all the rest of it becomes more of a function of doing our job than praying for rain and hoping that we hit a big exit.
Wonderful. Adam, thanks very much for joining us today. I really
Pleasure.
appreciate it.
Thanks for
Andrew Benioff with the Independent Lodging Congress and the Llenrock blog. Thanks for joining us.